Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, yesterday was the Nifty expiry, and the markets were actually looking very decent for the entire, day almost. And markets were rising up, open gap down, started going up, and started staying there above 18,400 for some time. It looked as if market was about to break out, and from there, it was a total consolidation till the end of the day. But then, after 3 o'clock came that big selling, and the market totally changed its character. So it was like in just half an hour, the market actually fell down, kept falling, and finally is again back at 18,300. So right now, yesterday market is actually closed nowhere. It's not gone anywhere. Finally, it is closed where it was open. But then, interestingly, yesterday DIAs have again started buying more. So yesterday they bought for almost 300 crores, and FIAs have also bought from almost 100 crores. So probably it was more of the retailers coming into the play. So that is something that's happening right now in India. So there was no reason for Indian market to actually close this high. In fact, every other global market has actually closed lower yesterday, majorly because of the US debt ceiling issue. So yesterday also they had a meeting and it has not led to any conclusion. So that has actually led to further fall. US markets have kind of crashed, I would say, yesterday because Nasdaq was down by almost 1.5%. S&P 500 and Dow though don't even mention because these guys have been falling continuously. They have not been moving anywhere. So Nasdaq was only majorly led by tech stocks. Was the only sector which was moving up, but that also has fallen yesterday. So naturally, fear is getting tense because June 1st is the date. If they don't come to a conclusion by then, naturally things can go out of control. So that debt, immediately the and the US government defaults the debt, and then naturally the markets are bound to fall. So probably traders are getting caution now as days are approaching. Now this is not a right situation wherein you see people are not taking a decision at this nth moment. We are on 24th and just another 6 more days, and they have to come to some conclusion. So, not that I'm saying that this is not going to conclude. I have a gut feeling that, of course, this would come to an agreement just before first. But then, still, why keep on dragging to the last moment? That's something that I don't like personally. But then, that's how things are going right now. So, apart from that, if you look at some important data that came in yesterday, NMDC and Ashok Leyland has come out with results. NMDC profits were good, but revenue has gone down, which is not a great thing. If you look at Ashok Leyland, it's the other way around. The profits have come down compared to last year, but then the revenues have actually gone up. So that's a good thing. It's always better when revenues go up. Profit, anybody just to show in book of profit can actually manipulate things or cost control and show the profit increase. But then revenue going up shows the strength in the company. That means the business is going higher and higher. So revenue is more important. So that way Ashok Leyland has fared better. Of course, the stocks will react today, but not again, like I always tell, it's not the first day after the result announcement that's important. We already have some holding in Ashok Leyland and NMDC. NMDC, though, we have kept it just for the amazing dividend that comes in. So that will continue to hold right now. Of course, metal stocks are cyclical, we know that. So we are not expecting any big growth out of it right now. But of course, the dividends are good, decent enough, like 6 to 7% returns. Amazing for a stock like NMDC. So that's something that we are looking at right now. Along with that, if we see some growth in stock, then NMDC would be an additional, icing on the cake. So Ashok Leyland is looking good as of now. Commercial vehicle sector is also bound to grow as India progresses further. So I think it's okay to hold on. Again, this is not a recommendation. I am not a SEBI registered analyst, but this is just something I'm sharing for our knowledge. So apart from that, if you look at the market, there is some bad news as well. Reliance probably is the first Indian company to actually announce layoff. They've announced layoff of almost 1,000 people. So it looks like there are some also seeing some cost cutting coming in there. So that is something to be focused. Let's see how that is going to react in the market today. That will be in focus. Apart from that, important results coming up today is LIC, Nykaa and Hindalco. So LIC is bound to come out with good results, and Nykaa is something that we need to watch. And apart from Hindalco, which again I'm not expecting big great results for Hindalco. So let's see how they actually come out. And remember, today is Wednesday. Tomorrow is the expiry, monthly expiry. So volatility is going to be at its peak. Naturally, when the US markets have crashed, SGX Nifty has also crashed. So we are going to see a gap down opening, hopefully. But of late, like I've been telling you, SGX Nifty in Indian market has not been tracking SGX Nifty as such, because SGX Nifty shows a gap down and Indian market opens gap up. So there has been multiple variations that's happening. So as of now, SGX Nifty is indicating almost 60 to 70 point gap down. But however, there are high chances that markets could try to recover. But after the initial recovery, will it continue to recover, and where it closes today would be important to watch. So if you see, yesterday I also had spoken. Our view was that the market would expire within 18,000 to 18,400. So that view now continues. So that's even stronger right now. So yesterday, the way the market rallied day for yesterday on Monday, it was slightly doubtful. That's what I told you yesterday in the podcast. But then now things look like that range can be fixed, and market is kind of going to expire and going to be expiring in this range is what I expect. However, like I always say, stock markets can never be predicted, but just anticipated. And this is what we anticipate, and our trades are taken based on this view now. So that's about it for today. The markets are going to be super volatile, and I would actually not be going for aggressive trades, being a monthly expiry. So markets can tend to make big moves on either side. So let's see how the market moves today. And off late, with retail participation increasing, the volatility in options have actually increased a lot. So it's very important to trade carefully. So that's it for now. Have a great day. See you. Goodbye.